What's up, everyone, and welcome to another Bitcoin market update. In these videos, you'll learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin, Ethereum, and others. Just a quick reminder that everything on this channel is for educational purposes only and is not intended as financial advice. All right, let's dive into here Bitcoin on the monthly time frame. So right now we can see we've had this rise in price since our June low that we've set here. And really what we're seeing is a rise up that will likely lead to a lower high in comparison to our high right here that we have from April 1st. So because that is ultimately where we know that price will likely not get to, we should be looking to potentially either sell some of our Bitcoin or go short before we get to that point. That's at least what I'm thinking of doing in terms of from a trader's perspective, not a long-term holder's perspective. And the reason for that is because of the magnitude of the move. So we know that if we take, we need our magnet tool here. If we grab from here to here, we can see that we have a drawdown of about 56%. So because of that, the rise in price that we would need to supersede that would be about 125%. So because of that, what we're going to be looking for is an area to potentially go short because it's unlikely for us to just rise above 125% on the first push up. It's more likely that when we go up here, we're going to make a lower high and then we're going to come down. So let's go down to the weekly time frame and see. One other thing I wanted to mention before we go to the weekly is we've already broken the monthly high from August this month. We've gotten up to about 51.1. And so that is a good sign for the bulls. But what we'll need to see is a push higher above that level over the next few weeks to have this continue higher. Now, what we're going to be watching for this month is a monthly candle close that looks like it's forming a high. So you can see that, like, if you look at these candles, it looked like, this candle might end up forming a high because of the longer upper wick, but then obviously the next candle invalidated that. And then this candle looked pretty bullish, but then this candle you can clearly see looked much different than the last, 6 candles. And that led to the beginning of this drawdown here, which was also catalyzed by liquidations. So now what we're going to be looking for is candlesticks on this rise that look like something kind of like this, where we're seeing a reversal candlestick. So that's what I'll be watching for on the monthly time frame. If we go down to the weekly time frame, we can see that we have invalidated this previous weekly high as potentially being our weekly high that we were going to set with a push above this key high. So now we are continuing higher. We've now risen for 1, 2, 3, 4, 5, 6, 7 weeks in a row, and that's very notable. So we need to keep in mind that as we continue to rise, it's becoming more and more likely that one of these weeks we're going to need to see a drawdown where we form a higher low in comparison to the previous low here from July 19th. So right now, this week has pretty much, like I said, invalidated this as being a weekly high. And we'll have to see how this weekly candle closes in 2 days roughly to see if this starts to look like this weekly candle's high is going to be our high. So that's what I'll be watching for. One other thing I'm watching on the weekly time frame is this key high. So since we know on the monthly time frame we're looking for a potential lower high to be set, this might be where we go. We might go up to this zone, wick above this key high here, where there's a lot of stop losses because for people that went short here. And then once we wick above that and we close below it, that's what we would consider to be an SFP or a swing failure pattern, in that the price swung above this key high but failed to continue higher thereafter, and that will lead to some bearish price action thereafter and potentially our monthly drawdown to form our higher low. Most likely higher low. So because we've risen already so much in this rise, it's also likely we're going to form a higher low on the weekly time frame. So that's good news for the bulls. The bulls are clearly in full control here when it comes to this rise in price. So very good for the bulls. If we go down to the 3-day time frame, we can see the makings of a potential continuation of our 3-day bull trend. and that is with our low, high, higher low, and then higher high pattern. If we get this candle to close above this previous 3-day candle's high from August 29th, that's one candle that we need. We need another candle thereafter to then have 2 candle closes above our key high to confirm this black candle as a support level, very similar to this one that we have already. So we already have a 3-day support level from a bull trend here, from our low, high, higher low, higher high. And then once this candle closed above this key high, that is now telling us that we have confirmed a bull trend, and this black candle is now our support zone. So we grab our rectangle, we pull that over, that's our support zone, we get a bounce, we get a second bounce, and now we might just be continuing the trend. This looks like pretty bullish price action. It looks like we're kind of grinding through this gray resistance zone here, and we're just trying to make our way through that zone now. So very good for the bulls, really looking good in terms of bullish price action. So we'll see where this 3-day candle closes in 3.5 hours. If we go to the single day time frame, we can see a couple things here. One I want to note is just grab our red rectangle here from our resistance level from back here in, I believe, May 14th. So this resistance level now has been tested like 5 or 6 times. So we can see 1 test here, 2 tests here, 3 tests here, 4 tests, now 5 tests, and now we're going into it for the 6th test. So it's likely that once we close above this zone and close 2 1-day candles above it, that's going to give us a support zone where this red zone will turn into support. So that's what I'll be watching for over the coming days is, can we drive above this? And if we look at indicators like the super guppy, it's increasingly becoming more likely that we will go above that, because these EMAs are kind of helping price grind its way up here and just have this bullish kind of consolidation before continuation here. So looking really good in terms of pushing above that red zone. So that's something that I'm keeping an eye on. I'm also keeping an eye on buying inside of these green EMAs here, which we have yet to test. So we have not touched these green EMAs, and you can see they're expanding. There's increasingly more white space in between them than there was back here when we first formed them on August 18th. So that's notable. And these range from about 47,000 down to about 43,000. So really a $4,000 range of a potential buying zone. When we go back into this zone, I think that this zone will hold for the first test. So that's why I'm looking to go long in. If we go down to the 6-hour time frame, we can finally say that we've broken above this resistance zone that we had formed back here from August 24th, that we had tested and rejected off of so many times before. Eventually, we now finally just got 2 candle closes above it on the 6-hour time frame. So what we could do here is we could potentially take a trade. So one of the trades we could take is we could say we're going to go long on the wick of the candle, and we're going to put our stop loss below the zone, because if we go below it, we don't want to be in the trade, because then at that point, it's obviously not a valid support level. So what we could do is we could say, all right, let's use our long position tool here, and let's calculate our risk to reward ratio. So if we want to calculate our risk to reward ratio, what we're going to do is we are going to double click on our long position tool here. And if you don't know how to use this tool, you can check out our tutorial video where we break down how to use this tool. And it's very simple to use. It's exactly kind of what I'm showing you right now. So if we know that our entry point is the high of this candle, we see that that's 49,719. So we go to our entry price, and we're going to type in 49,719, and then we click enter on our keyboard. And then if we go to the low of that candlestick, that's at 48.8. So now we're going to put our stop loss at 48.8. Click enter. And now if we want, we can now go to our take profit level, and we can say that it's, right now going to be the top of this red zone, which is right up at about 51,597, which is what it's at. So let's just keep it there. We'll click OK, and now it tells us that our risk to reward ratio is 2.04. So it means we'll make 2.04 times the amount of money if we get an entry here, and the price goes up to this target and we sell here, then if we were to buy here and get stopped out here. So this is, I always look for risk reward ratios above 2, because if you're trading over a long enough period of time, if you don't take trades with good risk reward ratios consistently, and you take trades with around a 1 risk reward or less, it can take a lot. You'll need to get a lot of trades to go your way for you to make any money, versus if you take less trades but they're more high probability, high risk reward ratio trades, you have a much better chance of making better money long term. So that's a potential trade there that I'm keeping an eye on. If we pull up a couple of these indicators, you can see this is consistent with the super guppy, which is going to be, the faster EMAs are inside of that zone, and the investor EMAs are starting to trail up into there. And then if we look at this from an Ichimoku cloud perspective, also, consistent with this has been bullish and in the most bullish scenario that it can be in since, back here, on July 25th. So you could have just ridden this trend up using this indicator for basically an eternity at this point, it seems like, but it's the 6-hour time frame, so it's not actually, an eternity. But, these sorts of trend following indicators like the Ichimoku cloud and the super guppy are indicators that I personally appreciate and like using to participate in trends. So this is the potential trade that I'm looking for right now on Bitcoin. That's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around cryptocurrency and blockchain technology. And if you haven't already, check out our beginner technical analysis course on lutheria.com. This is where you can learn all of the foundational elements related to cryptocurrency trading, such as volume analysis, candlestick analysis, trend analysis, technical indicators, bulls and the bears, and a lot more as well. So check that out. And until tomorrow, onward and upward.